Hi, everyone. Welcome to the webinar today. My name is Alexandra Alvarado. I'm the Director of Marketing and Education here at the American Apartment Owners Association. So glad that you all could join us today. We are going to talk about real estate syndication, which is a topic we haven't really covered before. So I'm really glad that you could join us today. We are going to start off with just a couple things. One is we are recording this whole thing. So if you are not able to stay the whole time or you miss anything, don't worry. I'm going to email you this whole presentation as a recording as well as the PowerPoint, so you'll have everything that you need. We're going to have a presentation that's going to be a little under an hour, and then we'll have some time for questions. We may go over an hour with questions depending on how many you have, so stick around if you can, but if not, again, you can have the recording. And also, if you do have questions, please put them in the question box, not the chat, so that we can make sure that we get to all your questions and just keep better track of them in general. So you might see up on the screen Rentometer's ad here. Rentometer is the sponsor of today's webinar, and I do want to tell you a little bit about them before we get started. So whether you've already established a rental business or you're analyzing your first deal, you know that getting the rent right is absolutely critical to lowering investment risk and optimizing your rental income. That's why the go-to source for rent data is Rentometer. Real estate professionals, property owners, and investors rely on Rentometer to help them save time evaluating local rents and rental market conditions anywhere in the US. Don't take our word for it. Rentometer provides over 200,000 rent reports every month and gets rave reviews from customers. Alex Kamana, a property owner in San Diego, says, as a professional property manager, I find Rentometer to be a very valuable tool when determining rental values for new clients. Really a great way to quickly establish rental value on both single-family homes or apartments. Go to rentometer.com for a free trial today and grow your rental business smarter with Rentometer. We've been working with Rentometer for a long time. I've used them. Our speaker today has told me that she uses them. So we're going to talk about that today as part of this discussion. So I thought Rentometer would be a great sponsor for today's webinar, and I hope you check them out soon. I'm going to go ahead and stop my screen share and have Atara launch her screen so we can get started with the presentation. And I am also going to launch a poll question here. If you would like a free trial of Rentometer, you can go ahead and select yes, and we'll go ahead and get you set up with that. Basically, it gives you access to all of the local rents and comparables and property reports you want for a limited time. And then if you want, you can pay for the service. But honestly, it's just a great way to know if the rent that you're charging is reasonable, or if you're looking to invest, what that rental income may look like. It is based on comparables, real-time sort of analysis. So we'll go ahead and connect you with Rentometer if you do say yes, and I'll launch the poll question again at the end. So if you don't get a chance to say yes, you will again when we finish. So I'm gonna go ahead and close out this poll, and I'll hand it over to you, Atara.
Oh, thank you so much, Alexandra. I'm so happy to be here. Welcome, everybody, to my webinar. I appreciate really all of you taking time out of your day to really spend an hour with me here. So I want to discuss real estate syndications. And if this is a term you are not familiar with, you are not alone. Many, even those who own property, are pretty unfamiliar with real estate syndication until they actually get into it. So today we're going to unpack real estate syndication in connection with multifamily properties. So let's get started. So here's a little about what we're going to cover in today's webinar. So I will briefly outline why multifamily. And I would love if all of you could just put in the chat as to whether you currently own multifamily property. And if not, what kind of property do you own? So Alexandra, let us know what the answer to that is. It's always good to have that. We will also discuss the ways to profit in real estate. We will discuss passive investing versus syndication. We will discuss what is syndication. We will discuss how many investors do I need when I syndicate? Why would someone invest with me? Top 3 questions investors will ask you as a syndicator. And finally, we will review a real deal of mine. So stick around for that. So this is me. I am Atara Twersky. I'm an attorney by profession. I live and I work in Manhattan. I'm a real estate owner. I own the company Ascendo Capital Investments. I am the host of a podcast, which Alexandra has been my guest on. It is called Bridging the Gap, Real Estate for Women, where I empower women to understand real estate as an asset class. So I went to Brooklyn Law School in New York City. And I am also the best-selling children's book author of a book called Curly Girly. It was inspired by my own young curly-haired daughter. So if you are curly-haired yourself or have a child with curly hair, you may want to check this out. And I'm the mom of 3 amazing children. We love family adventures. Like many of you, we love to travel. Here's some of what we like to do in our spare time. And like many of you, I am a property owner. And here I am at one of my properties doing property inspection. So I wanted to give you a little background about me and how I got started, because I think many of you will find my story relatable if you are a professional of any sort. So I began my legal career all excited to be a lawyer, thinking that it was going to be very TV-like, where I would win cases and I would convince judges that my clients were right and that the bad guy needed to be put away. But in fact, I found that being an attorney is not like the movies. It is really hard work. What I quickly realized was that, like all professionals, we are exchanging our time, our energy, our skills for a paycheck. So essentially, when we don't work, we don't get paid. And sometimes being a small landlord, like many of you are, can actually also feel like a 9-to-5 job. So let me backtrack even further, because like many of you, I got started in real estate way before I fully understood the word syndication. I only understood that real estate and owning properties, hard assets, was probably a good thing. So I got my start by buying and flipping HUD foreclosures while I was still in law school. Here's my story in a nutshell. I was filling out loan paperwork for what seemed a 21-year-old an overwhelming amount of student loans. And I realized that I would essentially be spending a good part of my 20s and 30s and maybe beyond using most of my paycheck to pay off my debt. And that didn't sit well with me. So I decided to get a job, and I lucked out. I got a job at Housing Urban Development in New York City. And I eventually found myself as a junior paralegal at a closing table every day, where I watched investors buying foreclosures. And sometimes they were buying 4 or 5 properties at a time. And I thought, like, what is going on here exactly? And when I questioned them, they told me that they were essentially buying these rundown properties, fixing them over, and selling them at a profit. And in the naivete of youth, I thought, wow, they can do it. I can do it too. So I found a real estate broker on the HUD approved list, and I compiled all of my money from years of lifeguarding and babysitting and waitressing, and I bought my first property. And thus began my career in real estate. So these are some of the neighborhoods in Suffolk County in New York where I got started. I don't know if any of you are familiar with any of these names. I certainly, having been a New Yorker all of my life, had actually not heard of any of them till I owned property there. And so here's a picture, not an exact picture, but something really similar to what I found when I opened the first store on my HUD property. Let's just say it was not a pretty sight. I can actually remember unlocking the door and almost crying, because at the time I was only allowed to do a drive-by of the property prior to purchasing. So I never actually saw the interior. And when I did, I couldn't believe it. It was a complete mess. I was 21 years old. I had zero experience. I didn't have a father or brother who was going to help me. But I did have a really nice real estate broker. His name was Bob Burke, actually, and I will always be grateful to him, because I remember he looked at me and he said, "Don't worry, Atara, we got this." And together he helped me find a crew and renovate the property. And long story short, I sold the property just a few months later, and I made my first $7,500. And that was actually more money than I had ever seen at one time. And this really began my journey in real estate. I know many of you are landlords of various smaller size properties. And as landlords, I know that you understand the benefits of owning property. But what if you could own larger properties and make a bigger impact and increase your real estate holdings and really leave a lasting legacy for your children and your family? So I want to speak for a moment about what makes multifamily such a great asset. When you become the owner of a larger multifamily property, you actually have the power to do really meaningful work, like turning the places you own into thriving communities for your residents, understanding that your residents are compiled of people with families oftentimes, and places where kids want to run around and play and do homework and bring friends to. And you have the power to make that someplace special for them. Multifamily is also one of the surest asset classes to invest in. We all need food, clothing, and shelter. And actually, statistics show that there really is just not enough housing here in the US. And especially now, when the stock market is so uncertain, when crypto is so hard to understand, when inflation is soaring, real estate remains a tangible asset that is really safer long-term place to put our money to grow. So I'm a person who loves quotes, and I love these quotes by FDR and Andrew Carnegie, because when you think about it, behind nearly every wealthy person, somewhere is a real estate investment. They may have started out selling one thing or another, but once they make any money, inevitably, most people want to invest that money into the real estate market. So enter syndication. What is syndication? It really is just a fancy term for a group investment. With respect to real estate, it is when a group of investors pool their money to buy a larger real estate asset, like a larger multifamily or a commercial building. Syndications are led by sponsors. These are the general partners. Most often, an LLC is formed, which is a limited liability company, and the sponsor, also known as the general partner, will bring in investors. These are the limited partners, also called the LPs. You may have heard this term. LPs pull their capital together to make larger purchases than they would otherwise be able to make on their own. The sponsor is usually responsible for acquiring the property, overseeing the property, the renovation, obtaining property management, and in general, running the deal. The limited partners invest their money, and in exchange, they share in a percentage of the ownership and profits. LPs share in all the benefits of investing in real estate, like the cash flow, the equity tax benefits, which we will discuss, without the hassle and the time commitment of being a landlord. One of the most important benefits of syndication that I really love is the economy of scale. If you own one property and you have to rehab this property, then you might have a contractor charging you $20,000 to redo the kitchen. But if you own multiple properties or multiple units in a single property, like a larger multifamily, and you rehab several units at a time, you now may be charged $15,000 for that same $20,000 renovation on its own. They may even give you a better deal if you're doing 3 or 4 or 10 or 15 or 20 units. This is the same for property management. If you have one property, you might be charged 10% to manage. If you have 2 or 3 or 4, that number can go down significantly. And this is what we call economies of scale. It surprisingly gets easier as you scale. It's like, I like to say as a mom, it's like having children. The first one, incredibly difficult, almost feels unmanageable. The second one, adding 2, also feels really hard. By the time you get to the third, it's like, yeah, I got this. In very practical terms, the simple question and answer is, how can you buy a bigger building if you only have, let's say, $100,000? Well, if you get a bunch of people to invest with you $100,000. Now you can have $10 million, and now you're able to buy a larger size building. In visual terms, this is what a syndication will look like. A group of people putting their money together toward one larger investment. I want you to think of syndication as flying a plane. The sponsor, also known as the general partner or the GP, is the pilot. He or she is actually flying the plane, ensuring that everything is running smoothly from the cockpit. The limited partner, those who contribute but are not running the deal, they are the passengers. They're along the ride, they're on the trip. They have the benefit without having to worry about the details of what's going on in the cockpit. In this case, they don't have the hassle of the day-to-day management of the asset. So let's discuss some tangible benefits of real estate syndication. They are cash flow, leverage, appreciation, equity, and tax benefits, which we will go in greater detail as we progress. So in order to know whether you want to syndicate or invest, or perhaps do both, you really have to understand the nuances in syndication. So as I discussed, the number one benefit to syndication is your ability to leverage, essentially to grow your portfolio. When does it make sense, though, to syndicate? Well, it makes sense when you have a great deal, but you don't have enough money to buy it alone. Or you may have the money, but you have no idea how to find a deal and build an empire. Syndication can also help with retirement planning. Many investors invest in other people's syndication to earn passive income to plan their own retirements. What are the ways to profit as a real estate syndicator beyond the project investment? So as a syndicator, there's essentially three ways. You will be getting an acquisition fee for putting the deal together, acquiring the deal essentially, which is usually between 1% to 3% of the project fee. You may also get an asset management fee, which is you're managing the asset, and that is usually typically also between 1% to 3% of the purchase price. Though I want to really put it out there and caution you that you never want to become a syndicator for any of these fees. Syndicate deals because you believe in the project long term. The fees are gravy. They're not a way for you to make a living. Keep your day job if that's where you think you want to make money, because that's not what syndication is about. A good sponsor will be much less concerned with those upfront fees than how the project is going to look in the long term. You will also profit because as a syndicator, you may actually share in the profits. Can I be a syndicator and an investor? And the answer is, of course you can. In fact, many syndicators invest in other people's deals and vice versa. This helps diversify. So there are many important things to learn about syndications, but I really want to break it down into 4 digestible pieces, and they are the following. This is relationship-based business. You have to service your investors and put their interests above their own. They are your customers. I know that this seems intuitive, but you would be surprised how many people forget this along the way. The second thing is that when you're a solo landlord, you get to do things your way on your own terms. But in a syndication, there are legal rules to follow, and you really want to hire an attorney to advise you properly. This is super important. You do not ever want to syndicate without engaging proper counsel. I am an attorney, and I can tell you that I would never represent myself on a syndication. So who regulates syndications? The SEC is the governing body for syndications. The SEC is looking to protect investors. And to that end, sponsors, syndicators must provide a PPM, a private placement memorandum, to their investors, which will detail the specifics of the deal as well as the risks involved. And the sponsors must decide what kind of investors will they be bringing into their deals. In other words, will they be bringing in accredited and sophisticated investors or not? The SEC provides criteria for what qualifies as an accredited investor. So there are three criteria that need to be met to be an accredited investor. The number one is that you have to have an annual individual income of $200,000 or more for the last 2 years, or $300,000 jointly with your spouse for the last 2 years, or a net worth of at least $1 million. This will exclude your primary residence. Now, in 2020, the SEC allowed for accredited investors via a certain professional license that you can obtain. So that is also another way to qualify. Accredited investors have more opportunity to invest in real estate syndications. So essentially, the SEC believes that if you are an accredited investor, you are financially sophisticated, and therefore you have a reduced need for protection provided by their general regulatory disclosure filings. So let's say you're watching this webinar and you think, wow, I'm already a landlord. I want to syndicate. I want to buy a really big building. How many investors do I actually need? So I want to really get this out there. You need twice as many investors as money that you actually need. And the reason for this is simple. The best intentions investors may not come through. They may actually love your deal. They want to invest in your deal, but the timing is not right when they actually have to put up the money. Their circumstances may change. So as a syndicator, you have to make sure that you have a pool of investors that is actually greater than your capital needs. So what comes first, the deal or the money? Well, I always like to say, never raise capital when you need it. You don't want to be in a position of scrambling for investors when you have a deal to close. Okay, so what makes a good deal for syndication? I think it's really very similar to landlords, what you have been doing now, because you are bringing in investors, it just becomes more pronounced. So you really have to have a written plan, which you might have not had to have as a smaller investor. And this may seem obvious, but it needs to be said. You have to be paying a really good purchase price. Your purchase price is a fixed number, so you want to make sure you're not overpaying. That is going to affect your business plan and your numbers. You can add value to the property, usually by renovating and increasing rents. So that would make a good deal, a property that has the ability to add value by increasing rents. And then you have to ask, is there a good return on your investment? This is your ROI. I'm sure you've heard this term. So over a period of time that the investors will remain part of the deal, what kind of return will you be able to offer them? And is there a decent cash on cash? Now, sometimes you will have a higher overall return and a lesser annual cash on cash. And that's okay, as long as your investors understand that. The fifth thing that I believe makes for a good deal is that, are you in an area of good job growth and population growth? And last, a good deal is one where the syndicator always underpromises and overdelivers to his investors. That's what keeps you honest as a syndicator and your investors coming back for your next deal. Okay, so I have a deal. I'm ready to syndicate. How do I find investors? So networking is the number one way to go out and meet people. There are people everywhere who are interested in these kinds of opportunities. Just tell people what you're doing, because you may have friends, families, colleagues that are interested that might not even realize what you do unless you tell them. So keep in mind, this is not about asking for money from people. This is about presenting them with a good opportunity. So what's the mindset to raising capital in a real estate syndication? Well, I always like to say that you really must believe in the deal. That is the number one most important thing to raising capital. If you have a good deal that you believe in, the money will follow naturally, because money follows good deals. You may think that in today's market, it's going to be really difficult to raise capital. I should save this for another time. And I actually think there is truth to that, because people are very fearful. But there are also less good deals out there. That's the flip side. So if you have a deal that is a great deal that you believe in, this is actually a great opportunity for raising capital, and the capital will come to you naturally. So a number one question that new syndicators always ask is, why would investors invest with me? Well, they're going to invest with you because they believe in you and in your deal. And that means, first and foremost, that you need to believe in your deal. So how do you find properties that are good investments for syndications? Invest where you know. So this is me on the phone, and I use this photo because I spend an enormous portion of my time on the phone canvassing for good deals and building my network. And I think part of that is really working to learn the neighborhood that you want to invest in block by block. So when you're a smaller landlord, you most likely are invested in properties close to where you live. And you don't even realize that you're doing that because you want to invest where you know. But that doesn't mean that you can only invest where you live. It just means that when you're new to an area, you really have to work to learn it. I like to say that insider trading is legal in real estate. And what that means is that you can develop a network of people who can help you find off-market deals and give you the inside scoop, and that is totally legal. So build your network. I'm going to tell you about the top 3 questions investors will always be asking you that you need to be prepared to answer. So the number 1 question is, can I lose my investment? So the answer is, this is obviously very unlikely. This is a hard asset. This is not a risky class like the stock market might be, but in real estate, obviously we prepare for disasters. We have insurance. So it's very, very unlikely that anyone is going to lose all of the capital they put in. But you always want to be prepared that nothing is risk-free. The second common question is, when will I get my money back? So again, that is going to depend on your written plan, which is going to include an exit strategy. You have to put that in place. And the short answer in most syndications is that there is usually a 3 to 5 year horizon on syndication deals. The third question is, what kind of tax benefits am I going to receive? And everybody asks about that because they know that real estate does provide tax benefits. There are many tax benefits like cost appreciation, cost segregation, which can usually be passed down to your limited partners. But this is something that you want to advise your investors to speak with their accountant, because everyone's tax situation obviously is different. Okay, I just want to let everyone know we are going to get to a real deal example shortly, so stay with me. So as a syndicator, you cannot simply act like a small business owner any longer. I think I've said that. You have to be accountable, which means, what does that mean in practical terms? It means you need to know how to underwrite and explain your deal. So I know it's really common as a smaller landlord to like the vibe of an area or have a good feeling about it. And I actually think that remains important throughout a real estate career. But it also is about the numbers, and the numbers will always tell an important story. And you have to keep your investors informed with your 3 to 5 year plan and an exit strategy. And you will need a good property manager. I think that it becomes exponentially harder to manage alone as you syndicate and grow. So I believe that 2 of the most important things to have when you syndicate are what I like to call the 2 Ps. A good property manager who really knows the area, the rental market, how to find and vet tenants, how to keep tenants, how to run this property like a business. And the second thing, a good plumber. Because if you do not have someone to call in the middle of the night when a toilet or a shower is leaking from one floor to the next, you're going to have really unhappy tenants. And that makes for a really bad situation. Okay, so here is our real deal example. This is an off-market deal that I sourced myself. It is a 32-unit multifamily. And I found this property by working really hard to identify a market that I thought had growth and that I felt was not overly populated by investors. I always say you don't want to be the first person in an area trailblazing a brand new untapped location, but you also don't want to be the last one in the area, like where everyone's at the tail end of it. You want to identify an area that other investors have started to buy in, but it's still relatively off the radar. This is not easy to do, and it requires a lot of, canvassing and networking. So what makes this property so great, and why did I choose to syndicate it? So the first thing is the location. Follow your demographics. Like, what is the industry in the area, and are people moving into this area? For this particular property, I am in Northwest Arkansas, which is not just any old place in Arkansas. It is the home to Walmart and Tyson Foods and JB Hunt. 3 Fortune 100 companies are headquartered in this area. So that makes this location very unique, and that makes job and population growth really amazing here. The next thing to consider that makes a property great is financing terms, because your numbers are very much impacted by the financing terms that you have in place. So in this particular case, I was able to secure seller financing at a 5% interest-only rate for 5-year term. So now if I went to a bank today, that same loan would be anywhere from 7.5 to 8-9%, which would completely change my underwriting. And that in turn changes my return for my investors. So let's discuss this particular deal and its actual structure. So my investors in this case will earn approximately 7% annual cash on cash. So in real dollars, if they invest $100,000, they will earn on average $7,000 on that $100,000 that they invested. There is what we call a 30-70 split, meaning the investors will receive 70% of the profits, and I, as the sponsor syndicator, receive 30%. The play here is to increase rents by doing a value add renovation. So currently rents are at $750. This was a property that I'm buying from an owner who has owned this property for a really long time. I think it's something like 30 years. He has been really hesitant to raise rents. He's friendly with all his tenants. That's all wonderful, and that's great, but he also hasn't been keeping the property maintained properly. And once I do a nice value add renovation, we will able to increase those rents to over $1,000. So this is a huge increase. And that's really where investors have the opportunity to make money. The plan is to exit after 5 years, and investors will earn approximately 20% of their money. So around $20,000 for their $100,000 investment. Over 5 years, they will have earned $100,000 and gotten their money back. So essentially, they are doubling their money. I do have a few spots left in this investment. If anyone is interested, they can contact me outside of this webinar. So I do want to leave you with some final thoughts. So I often hear owners or potential owners ask, what is the right size property to syndicate? Is it 5 units? Is it 10 units? Is it 100 units? And the answer is it can be any of those. You can syndicate a 2-family house by bringing in, your aunt and your mom's cousin, and you can syndicate 100 units by bringing in friends of friends of friends. The point is that the numbers really have to work. The last thing that I want to address briefly is cash flow versus ARR, which is your average rate of return, also known as your ROI, your return on investment. So cash flow, I think I touched on it, but more specifically, is what your investors are going to earn average year by year. And the ARR is over a period of time, what is your average return on their initial investment? So some of your investors will want cash on cash annually, and others will be happy with the return on investment over time. And this is a way broader discussion, but I wanted to give you a short intro to these terms because in syndication, these are always important things to know about and to present to your investors and to know for yourself what kind of deal it is. So in a ground up development deal, there usually is little to no cash on cash. Certainly not initially, because there's no structure, there is no opportunity to raise rents. We're still building. But to that end, the annualized rate of return can sometimes be really, really high. And that's why investors will go into those kinds of deals. To summarize, syndications can really help you grow your portfolio and build your real estate into an empire, not just for you, but for generations to come. The key to success is to repeat your syndication over and over. Don't just do it once. I think that is like the big takeaway. And, I have rarely met an investor who said, I bought this one property and I syndicated it and I never did that again. I think most syndicators will tell you that it is a really strong learning curve. It is a lot of hard work, but that once you do it once, it becomes easier and easier, and there's a lot of magic to it. So repeat is the key. And I want to leave you with a picture of me and one of my children on a recent trip to Vienna, Austria. I show it to you because I love the power that real estate affords us. For me, it's different for everyone, but for me, it is the power of time to do the things we love with those we love most. So figure out what the power is for you in owning real estate. And then you really have a long-term vision when you're investing. Here's how to get in touch with me, Atara at ascendoinvestments.com. And for more information on my deal, you can visit my website, ascendoinvestments.com. Thank you so much for joining me today.
Yes.
Thanks, Alexandra.
Thank you. That was great. Thank you all for sticking around. I am going to go ahead and relaunch the poll that we did at the beginning of the webinar. One last chance to go ahead and, I may need to relaunch this poll a little differently. So let's pause on that. In the meantime, please put in your questions in the question box. We want to hear all the questions you have for Atara. This is your opportunity to really get some great answers to any of your investing questions. Angela asking here, can we get a video on this presentation? Yes, this is actually being recorded. I'm going to send an email out to you all tomorrow, and we are also going to be sharing the PowerPoint slides with you. So no worries on that. Jeffrey Real Pellet asking, can I syndicate an apartment complex I already own?
Super interesting question. And I am actually doing something similar that myself now. So yes, the answer is I do not give legal advice, as I like to say, even though I am an attorney, but you can syndicate. You do need to make sure that you disclose that to your investors. And that is part of your PPM, your private placement memorandum, that your securities attorney will put together for you. But as long as you're full disclosure to them what's going on, you can absolutely syndicate post-closing and on a property that you currently own.
Okay, great. That was an interesting question. I didn't know that. So I'm going to go ahead and relaunch the poll. I did get it to work now. So if you do want to get a free trial of Rentometer, I'll give you another opportunity to do that. Question about what the difference is between a syndication and a REIT, pros and cons.
So that is a whole other topic. When you're part of a REIT, so you are part of a fund, and it's usually not led by just a sponsor, but a fund manager. It compiles there are different kinds of REITs, but it compiles usually many different assets rolled into one. Whereas when you are a syndicator or a sponsor, you're usually syndicating a particular deal, a particular property. However, there are REITs that are syndicated as well, but a REIT is just much more complex and larger, generally speaking.
Okay, and John asking what is a REIT? So that's sort of a new topic, but
Yeah, I was going to say that's a whole other topic. But I think I answered it a little bit just in saying that, yeah. It's a larger compilation of many real estate funds put together.
Okay. Question
Sometimes you'll actually hear people say, I'm raising money for a fund. So that can certainly be done. And that's usually what a REIT is. It will be a fund and they can invest in various different vehicles. They can say like, we invest in commercial real estate. And then they buy many properties. A lot of new investors will choose really to kind of know who the sponsor syndicator is and what they are investing in, I think, as an initial matter. So that's really what we're talking about here.
Okay. That works. I hope that explains it for you, John. Rusty asking for a $5 million project with an estimated $500,000 in rehab. How much capital would you be looking to generate?
So the question is not really how much capital you're looking to generate. It's really how much capital do you need? And that's going to depend on a few things, right? Are you getting, that's not a question to be answered off the top of your head, right? It's more like, what else is going on? Are you getting a bank loan? If so, what is the LTV? Is it 80%? Is it 75%? Is it 50%? Depending on those numbers and what other financing you have in place, then you will know how much equity you need. So assuming you get an 80% loan to value mortgage, then you would need 20% of the purchase price plus the $500,000 for rehab. That's generally how the numbers are working.
That's a good math problem there. Ben asking, what would you anticipate the legal fee costs to be in order to start a syndication, including all the attorney's fees?
So, there are various attorneys, just like I always say, there's different kinds of doctors and they all charge different prices. I would say that there are attorneys who will do this anywhere from $7,500 to $15,000, depending on the complexity of it. How many people you're bringing in to syndicate always is a factor. But you're not going to find a good attorney, I don't think, that will charge you less than $7,500 to syndicate and to put together. There are a lot of documents involved in that.
There's a range of qualified and price ranges for that.
Always.
So, So Ashok asking, can one do a 1031 exchange into your syndication?
Yes, a 1031 exchange can be done into a syndication. It's a little bit more complex. It's something that's legal in nature, but the short answer is yes.
Okay. Ben, if you could clarify, he just wrote for accredited investors to join. So I'm not sure. Oh, I guess for the attorney's fees is what he's referring to back on that, expanding a little more on that question. I see. Okay. I think we answered that one. So that's good. So those seem to be all the questions we have for now. I'm going to give you guys a few more minutes to answer any others. I'm actually kind of curious, Atara, where your name for the company came from.
Oh, thank you for asking, because I did put so much thought into that. Ascendo is from the Latin word to ascend or to go up. And so I thought that was really fitting because I feel like real estate for me is a place where I can really propel upward and there's no end to it. So I really liked that play on words.
Love that. Love that. I'm always curious when I hear words like that I haven't heard for a company name. It's not, just success investing or something we've all heard. I like that a lot. Great. Well, it looks like, we're not getting a ton more questions, but I would love to connect you with anyone who has questions after the presentation.
Absolutely.
Sure. So if that's okay, we'll go ahead and send some people over to you. I think, let's see if I have anything else here. I'm going to check the Q&A. Okay. What about syndication into any sort of commercial properties that aren't multifamily? Is that something that people dabble in?
Absolutely. You can dabble in syndication in anything. You can do syndication of storage units. You can do syndication of retail. You can syndicate anything as I said, it could be a 2-family unit that you say to your cousin, hey, come in with me. That's a syndication. So you can syndicate any kind of real estate investment for which you bring in investors and they earn returns.
Okay, that is a great explanation. So we'll have lots of opportunities, I guess, coming your way. What's a typical time period over which to find investors? Tony's asking.
So good question. So usually it's going to depend again on your network, right? Do you have a network in place? Are you starting from scratch? I've heard people say, oh, I've raised $1 million in a week. And I've heard people say, I can't raise $1 million in 3 months. So I think it really is going to depend, which is why I always really say, raise capital when you don't need it. Like get that. If syndication is something you want to do, get that ready to go. Build up your social media, build up your network, build up all of your contacts so that when you have a deal, you can syndicate.
All right. Dan asking, so what is your elevator speech when networking? What do you say to people to introduce the idea of syndication? Hi, how are you? What do you do? You say ...
So that's such a great and interesting question. I don't think that I have an elevator pitch in the sense that I don't like to simply accost people about what I do. I'm very interested in other people and what they do and what's interesting to them. And I think that you can't force this on anyone, but there is a whole group of people who will be interested once you engage them. And I think that's about you actually showing real interest in other people. And then, only then, do I ever talk about what I do. So I never really meet people and say, hey, I'm a sponsor. How are you? I never do that. I don't think that's, for me, the way that I want to present myself to the world.
That's probably appreciated by people around you.
I hope so.
Ben is asking, what is a good way to have people commit money to a deal that you don't currently have yet? Is it typically just based on trust? Is there a formal document that large syndicators use?
Yeah, so there's many services actually that will help you with that, because that is such a common thought process, right? Like I said, don't raise capital when you need it. So now what do? You have all this capital, but you don't have a deal. Where's it going? So there are syndication websites that will actually help you, where you can put something on your website that's like an investor portal. And this allows people to kind of reserved or soft commit to your deal. And then when it becomes more real, when you have a private placement memorandum up, when you have an offering memorandum up, when it becomes something tangible, then they can actually commit to it. But a good place to start is by putting an investor login on your website.
Do they actually put that money in the portal or just a log?
So the money, before it's committed, it's just, as I said, a soft commitment. And then via the portal, once they commit, money will be transferred to a bank account that you set up, right? Because you're going to want to set up an LLC and then a bank account in connection with that for funds.
Rusty asking, do you set acquisition parameters for future deals on the portal?
You can, and you don't have to. And I don't recommend setting parameters for deals that you don't yet have, because as I think everyone can see, this is such a changing market and you have to be flexible, and things are different than they were a year ago. And we need to all be mindful of that.
And then are you seeing in general, a hesitancy in terms of investing in syndication at this time because of the market changes, or is it still just, for the right deal?
Great question. I definitely think there is less money free flowing, as I like to say, than there was in the past. I think there was a huge frenzy around real estate and real estate investing, and everyone wanted to get into it, even those who didn't maybe fully understand it. So I think now we have weeded out people who really understand the benefits, or who want to learn and understand the benefits, I should say. And those are becoming more educated, knowledgeable investors. And I think that's a good thing. Bringing us back to, our sophisticated investor, that's never a bad thing.
I agree. Lorelei asking, what has been your success rate with meeting the targets of the deals you have done?
So like I said, under promise and over deliver. I like to do that a lot. So we really underwrite very conservatively. When I have a deal, I really underwrite so conservatively that sometimes when I show colleagues of mine my underwriting, they're like, oh, you don't need to do this. You can put higher increases for rents. And I just won't do it because I really want to make sure that worst case scenario, if things all go wrong, where are my investors going to be? I want to sleep well at night, and other people's money means a lot to me.
Yeah, and as far as underwriting with rent being lowered or decreasing in certain markets, are you then putting your rent estimates way below what you think, or maybe even decreasing a little over time in certain markets versus, before, where I think underwriting was using really just the highest expectation of it increasing, because it was for so long.
It was increasing for so long at such a fast, rapid pace. And I think if anyone reads, they know that that is not the case any longer. But I'm really mindful of investing in markets where I still feel like it's a good rental market. So I'm not decreasing. I'm not putting in for decreasing, but I'm very, very conservative at about 2 to 3% absolutely maximum for increases.
That's smart. Yeah. And I do think, at least from what I've seen, the market as a whole says one thing, right? When you take it in aggregate, but within the whole rental industry, you look at individual markets, there are definitely some that are still growing, that are still doing super well. And I mean, it's almost like you can't make a blanket statement on the whole thing.
Absolutely.
Yeah.
That's exactly what I said. Like, location is everything. Like, you have to identify a market that you believe in. And then you will be surprised that those markets are still growing despite everything else that's going on.
Ashok asking, how much total investment are you looking for?
On the current deal that I am syndicating, it's probably a little over $1 million.
Okay. Ben asking, do you self-manage or do you hire a third party? What management fee do you see in your area for small multifamily properties?
I really do not self-manage, but I have to say this. I like to understand what I give over. So when I am in a new area, I think it's really important for me to be really hands-on, and to not just let my property manager run away with it and say, oh, I know everything. Don't worry, I got this under control. I'm actually relying on them in the hopes that they know everything and have it under control. But I also want to be really informed and understand. So I don't self-manage. I think that's sometimes the death knell of a project, but I do really try to be as hands-on as possible.
I think that's so important, to manage your manager,
Yes.
and they know if you're taking it seriously, they are more likely to as well. That's how I see it. Yeah. And what's the fee that you normally see with most of those property managers that you work with?
It could be anywhere from 5% at the very low end to 10% at the higher end.
And then would you say the fee varies depending on the services that they offer, or is it the quality of the service?
I think it varies mostly based on the size, which is what I talk about when I talk about scaling. The more units they can manage, the less they will take as a fee. That's generally how it works. But there are so many property managers, and I do caution, this is like a topic that I really find so important, because a lot of times you'll go into an area, especially as a new investor, and you'll say, oh, I'm so excited to be in this area. I'm going to get like the best property manager, quote unquote. And that's the biggest name out there. And sometimes those managers, I'm not saying all the time, but often they're not going to provide you with the service that maybe a smaller manager can provide you with. So you really have to interview and have a good rapport and know who is going to be managing your specific units, not just the company, but who is the person dedicated to the management for you.
I like that. That's good advice. Richard asking, how can I learn underwriting for real estate deals?
Richard. So I have to say, I am not a numbers person, and underwriting is all about the numbers. So I worked really hard to learn underwriting. I had a really, really amazing mentor, my husband, who is also my partner. So I don't really know what to tell you about that. There are some online kind of resources. There are some classes you could take. I did sign up for a class at NYU early in my journey, which was a real estate underwriting class, which was somewhat helpful. It's hard. You really, if you can find a mentor, not everyone gets to be married to their mentor. So I felt really fortunate that he actually spent the time with me. But if you can find somebody to teach you the ins and outs of underwriting, that's invaluable.
Yeah, and I do think there's only so much you can learn in a classroom. You know, at the end of the day, you got to see a real deal, see how a real underwriter would choose a deal. So yeah, it does help to have a mentor, and networking is definitely a way to do it. You don't just network to get people to invest, you can network to have them help you. So with learning things. John asking, what is your philosophy on cap calls? Over the past 2 years, construction costs have made this fairly common.
Yes. So cap calls are really difficult. And I think it's important to know who your sponsor is and do they have deep enough pockets so that they don't have to do cap calls, because I think cap calls are really disappointing for a lot of investors. And obviously sometimes they need to happen, especially in today's climate. I think what happened is that people were on a frenzy. Mortgage rates were so wonderful. It looked like trees were going to grow to the sky. I always like to say they don't. And if you don't anticipate what could happen, then cap calls become the norm. But really, I think that they should be avoided by sponsors and should really be a last resort.
What is your floor and minimum in terms of investment? Do you have a target number of investors?
So it depends on the deal. That's such an interesting question. It depends on the deal, but the minimum investment that I usually like to take is about 75,000. And I've had investors give me much more. I don't want to take, somebody's $20,000. I think they need to accumulate a little bit more before I would feel comfortable.
And what would you recommend if someone is investing? What percentage of their net worth is reasonable to invest in a syndication deal?
So that is such a personal question. I think you really have to sit down with a pen and paper, and you have to know your own goals, and you have to know your aversion to risk, right? Because some people have a very, very high, risk profile, and they're okay with that. They say, yeah, I don't mind if I'm taking a lot of risk. I'm in the stock market here, I'm in crypto here, I'm in real estate here, it's all good. You also have to sit down and say, when am I going to need this money? Because you never want to invest money that you will need. And if you have any sense that you're going to need this in the next 3 to 5 years, well, then that shouldn't be invested.
Good advice. Also asking, how long have you been doing syndication, and how many projects have you completed so far?
So my husband and I have been doing it for many years. As I said, I got my start when I was 21 in law school. I didn't syndicate any of those deals. I didn't know the word syndication back then. I just accumulated money and then leveraged off one property off the other. But we've been going full cycle over many properties now. So, yeah.
That's exciting. So I don't see any more questions coming through just yet. We may close it out here if this sounds like a good spot to end it, Atara, unless you have any final comments for our people here on the call today.
Well, the only thing that I would want to say is, if it's something that you want to do, if you want to grow your real estate to the next level, don't sit on the sidelines because you think the market isn't great now. The market is really scary, but I also think that presents an opportunity. And I really think there are opportunities. There will be more opportunities in the months to come. So, you can just ride the wave and let it pass you by, or you can get in. And I recommend get in smartly, but get in.
That's a great way to put it. Definitely want to do it in a smart way, not haphazardly just because everyone else is doing it or not doing it.
Right.
At the end of the day, yeah, being educated is going to get you the furthest, and there's no reason to wait if there are good deals out there, and there still are. So again, everyone, I'm going to send you the recording tomorrow, along with the presentation, Atara's contact info as well. We'll send you the free trial for Rentometer if you didn't get to opt into that. Also, please take the exit survey as you leave. I'd love to hear your thoughts on this webinar. It also helps me if you have any topic suggestions for future webinars so that we can bring on new experts like Atara that can teach us other topics. Thank you so much for coming on and talking to our group. I think you did such a great job. We are just so thankful to have an expert like you. Ben is saying thank you both. Thank you, Ben, for coming.
Thank you.
All right.
It's my pleasure.
All right, everyone. Take care. Have a wonderful day. Bye.
Bye-bye.